Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
As we are all preparing to go into the summer months, it's time to discuss the 2025 tax deductions as we work on our business books and start preparing the paperwork that our accountants and tax preparers will eventually need. This early in the year, you ask? Sure, Boy Scouts, be prepared. Let's not wait until the last minute. Welcome to the time for vacations, hot weather, beaches, swimming pools, and the beginning of tax preparations for 2025. I'm Paul Rosenblum. If you'd like to support this podcast, check out the show notes. It's much appreciated. Let's start with personal taxes if you don't have your own business. If you're working for someone else as a W-2 employee and want to do a simple 1040 EZ tax return, the standard deductions for 2025 are as follows. Single filers, $15,000 straight deduction. This means that if you don't have any itemized deductions in 2025 and you make $40,000 a year, let's say, you can reduce the taxable income, or most commonly called your adjusted gross income, the AGI, and that would be $25,000. This works if you don't have kids, don't own property, and have no deductions for 2025. Talk to your tax preparer about that, since rules change and you might have deductions that you don't know about. Married but filing separately, $22,500 for head of household, $30,000 for married but filing jointly. If you are a senior citizen, there is an additional $2,000 if you are 65 or older. Gifts up to $19,000 are not taxable to the recipient. College and trade schools are not deductible, but check out the American Opportunity Tax Credit and the Lifetime Learning Tax Credit. These are not deductions, but credits that are available that give you a dollar-for-dollar reduction. Check out the links in the show notes. Medical expenses. Medical expenses not covered by insurance or copays are deductible only if they meet the threshold of 7.5% of your AGI or adjusted gross income. So after all other deductions, the last thing that your tax preparer will do to see if the total of your out-of-pocket medical costs meet that threshold. You would have to keep all receipts and itemize the medical costs. Payments for in-hospital care are included in this category, and these include hospital costs like rooms, food, as well as home health care, such as visiting health professionals. Eye exams, glasses, and contacts are also included. If you have a medical copay and you are reimbursed by an employer, then they are not tax deductible. Medicare premiums are deductible, as well as any other health insurance that an individual is 100% paying for. If you own a house, meaning not a renter, energy improvements, not a straight deduction, but there are credits for items like solar panels, solar water heaters, and similar improvements. The credits are up to $3,200. Talk to your tax preparer about that one. If you have a 401k or a 403b and take money out before you receive that money, 20% will be deducted for IRS taxes. Needless to say, but I'll say it anyway, if you want to take advantage of these, you have to keep very good records throughout the year. You can keep spreadsheets and documents and submit them to the tax preparer, but you have to keep all receipts and all documentation if ever audited by the IRS. Now let's move on to business taxes. Standard operating expenses for businesses are deductible. We have spoken about these before in the Chart of Accounts episodes, but here is a quick list. Rent and leases, including vehicles if the car or truck is purchased by the company and registered to the company. Utilities, insurance premiums, repairs and maintenance, advertising and marketing, travel and transportation costs, if related to business, of course. Professional fees such as bookkeeping, accounting, subcontracting, or attorney fees. Salaries and wages to employees, internet and telephone, continuing education if it relates to your current job or business. Subscriptions including software subscriptions, interest and credit card finance charges, and at 50% deductible, business meals and snacks for the office. If you are in the accrual method of accounting, then write-offs are deductible. All of the above are regular expenses in the books. All cost of goods, 100% deductible. If you have a pass-through company, meaning an LLC or an S corporation, after everything else is done, 20% of the net profit can be deducted. In this case, there's no entry in the books, just on the tax return. Section 179, which many accountants don't want to use because it's more time and effort, but it allows a business to take 100% of the price of qualifying new or used equipment, and rather than depreciate over a period of years as a fixed asset in the books, now you can deduct 100% in the year that it was purchased. The limit for Section 179 is $1,250,000 in 2025. Section 179 is usually booked as an other expense, which shows up on the very bottom of the profit and loss report. Bonus depreciation is 40% for qualifying equipment or vehicles. One example of that is if a vehicle is more than 2 tons, it might be eligible for bonus depreciation. So have receipts for any assets purchased ready to give to your tax preparer. This will be booked on the balance sheet. Home office deduction. If you have a home office and are self-employed, then you could get a tax deduction for the space used and the equipment purchased for the business. It's a complicated equation that's partially on the 1040 form and partially on the Schedule C for the self-employed. I'd suggest booking these expenses as an other expense so it can be found easily by the tax preparer on your profit and loss. If you are self-employed and you pay your own insurance premiums, then they are deductible. So keep the receipts. Book this as an other expense. If you move your business at least 50 miles, then part or all of those expenses could be deductible, but not if you have a home office. If you are just starting a business and have startup costs, take a look at episode number 1, then those will end up being tax deductible. Depending on the amount of startup expenses, they could be deductible in 1 year or up to 10 years. Charitable deductions for individuals and businesses. A business can write off 60% of your donations if they are cash donations to a qualifying charity that gives you a tax receipt. If you are a sole proprietorship, the IRS recommends that donations be included in your personal taxes, not on the Schedule C. In bookkeeping, donations would be booked in the business books also as an other expense so that the tax preparer can separate that category easily. Tax deductions for retirement plans, Roth IRA, traditional IRA, Keogh plan, and a solo 401k are eligible, but talk to your tax preparer about that one. Self-employed estimate dates. April 15, 2025 is the first estimate, same as tax day. June 16, 2025 is estimate number 2. September 15, 2025 is estimate number 3. And the last estimate for 2025 is January 15, 2026. I hope this episode helps you in planning for the rest of this year. Have a great July 4th, which is coming up shortly, and have a great summer. I'm Paul Rosenblum.